Welcome to Overnight Market Brief, Pre-Market Edition by AGI Era. Good morning. Today is Monday, March 2nd, 2026, and it is shortly after 8 a.m. Eastern Time. This is your executive summary of global market developments, analyzing the overnight flows in Asia and Europe, the key macro drivers, and the setup for the North American Open. The prior session and macro context. First, a look back at Friday's close. Wall Street finished on a defensive footing influenced by nascent geopolitical concerns. The S&P 500 settled at 6879, down 0.43%, while the Nasdaq 100 declined 0.3% to close at 24,960. Crucially, the session was driven by early signs of escalating Middle East tensions, but the real story right now is in the macro assets. Right now, the 10-year Treasury yield is trading at 3.995%, up 1.34%. The U.S. dollar index is surging 0.88% at 98.43, while crude oil is up significantly around 72.42, a gain of 8.06%. The pronounced spike in crude oil prices fueled by the intensifying Middle East conflict is directly contributing to the U.S. dollar's safe haven rally. This surge in both the dollar and yields is acting as a significant headwind for equity futures this morning, particularly for growth-oriented tech stocks. Overnight session, Asia and Europe. Moving to the overnight session, global markets have been largely risk-off, reacting to the escalating geopolitical landscape. In Asia, the picture was mixed. In Tokyo, the Nikkei 225 finished down 1.35%, tracking the broader risk aversion and the strengthening yen against a surging dollar. Meanwhile, in Greater China, the Hang Seng declined 2.14%, while the Shanghai Composite gained 0.47%. The divergence here was driven by the Hang Seng's sensitivity to global risk sentiment and the dollar's strength, while the Shanghai Composite found some domestic support. In Europe, major indices are trading with a cautious tone. Despite several Eurozone manufacturing PMIs showing stabilization or a return to growth in February, notably Germany, Italy, and the UK, the overarching geopolitical concerns and the strong dollar are weighing on sentiment, providing a defensive lead-in for U.S. traders. U.S. futures and the open. Turning to the U.S. pre-market, equity futures are under significant pressure. S&P 500 futures are trading down 1.07%, while Nasdaq 100 futures are down 1.40%. The relative underperformance of Nasdaq futures suggests investors are rotating out of higher beta growth stocks, a direct consequence of the rising 10-year Treasury yield and the broader risk-off environment driven by geopolitical developments. The daily catalyst. Looking ahead to the session, investors are focused on three key catalysts. First, the escalating geopolitical tensions in the Middle East, particularly the reports of U.S.-Israel strikes, which are driving safe haven flows and commodity prices. Second, the continued surge in crude oil prices, which is exacerbating inflation concerns and impacting global growth outlooks. And finally, the strengthening U.S. dollar, which is acting as a significant drag on international earnings for U.S. corporations and tightening global financial conditions. The confluence of these events is likely to drive elevated volatility in the morning session. Given the overnight setup in rates and the dollar, the market's path of least resistance appears to be lower, pending any further developments from the geopolitical front. That concludes your overnight market brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.